Hi everyone, my name is Emma and welcome back to our continuing Attract Capital webinar series. I am here with our host and CEO, Dave Barnett. And today's webinar title is the mandatory elements for a mezzanine debt raise. And so Dave, this title, suggests that some certain criteria needs to be met in order to, of course, raise mezzanine debt. What would that mean?
Excellent point, Em. Yes, there's a number of mandatory elements that you have to have for a mezzanine debt raise. And boiling them down, it's the size of the company in terms of revenue and EBITDA, the industry type, the deal type, and the buyer fit, how the background of the buyer fits with the deal that they want to do. Those are the four broad categories of elements that lenders get more detailed about once you get into the deal.
Understood. So for the folks sitting at home, how would you describe the difference between mezzanine debt and an everyday bank loan?
Great question, Em. So mezzanine debt is structured based on the cash flow of a company, not on the collateral of a company, which a bank loan is usually structured on. And mezzanine debt loans are sized based upon the multiple of EBITDA based on future growth of the company. So it has a very expansive approach to the debt capacity of a company. The loans themselves are usually much larger than a loan that you will get from a bank, and they're not secured by assets generally, and they're not secured by a personal guarantee, which makes them very attractive to a buyer because they don't have to personally guarantee the loan with all their personal assets. They're usually used to fund big transformative growth steps, such as an acquisition or a hyper growth strategy that a company has that they don't have enough cash on hand internally to be able to fund on their own. And if they go to the bank will only give them a fraction of what they truly need.
Got it. So harkening back to the top of our conversation, what exactly are those criteria?
So the mandatory elements, there are 5 mandatory elements. And the first one is you need to be a successful buyer. You need to be, if you're going to buy a company and you want to raise mezzanine debt, you need to have somebody, you have to be an individual with a successful track record, and you need to have equity to invest or something of value to contribute to the transaction. If you show up and you're a rookie and you have no prior experience in an industry and you have no cash, you will not get very far with a mezzanine lender because they're looking for accomplished people that can put equity at risk and have skin in the game. That's number one. Number two is the company has to have stable financial performance. It needs to be performing at a reasonable growth rate. Historically, it needs to have good profitability. Usually the EBITDA margins are the proxy for that, and it's about a 10% EBITDA margin that they're looking for. That's number two. Number three, they look for revenue of over 10 million and EBITDA over 2 million. There's exceptions to that, but that's generally a pretty good yardstick. Number four, certain industries. The industries that mezzanine debt lenders like are business services. They like technology and software. They like healthcare, manufacturing. They like consumer products. They do not like real estate. They do not like commodities, and they do not like gambling or any of the so-called vice industries. And the fifth thing that mezzanine debt lenders, and this is probably the most important thing, is they need a good growth story. They need to have a clear and a compelling growth story, and it needs to be spelled out for them very comprehensively how you're going to get from point A when they give you the money to point B when you're going to repay the money. So it's very important that you really illustrate the growth story with a lot of detail. And those are the 5 things that you look for. And if you have those are the mandatory elements. Now, you may not have them all, but you'll have most of them, and you may have to create one of them on the fly. But some of them are pretty non-changeable. You either have it or you don't. And this is what they're looking for.
Thanks, Dave. So you heard it here first, you guys. Thanks so much, and we'll talk to you next time.
Take care.